Welcome to Once Upon a Coin, documenting the ongoing history of blockchain and cryptocurrency. And as always, I'm your storyteller, Jason Cassidy. Today's story is about a startup from the early days of crypto who made a real name for themselves. They were looked upon as one of the first enterprise-level players to utilize blockchain technology on Bitcoin. This was the project that was going to showcase to the world that Bitcoin could be used for more than just payments. It could also be a record-keeping tool, and Factom had the right idea to prove that. Everything was going great for them, until it wasn't. They went from industry darlings to a forgotten project in record time. So, what the heck happened to this up-and-coming startup that showed so much promise? Well, let's find out. This is the story of Factom.
Sun cast a shadow, a digital line is coming over the mountain and over your mind. Double down your Bitcoin, hang on for the ride. We're moving into the future, one block at a time. We're moving into the future, one block at a time.
Factom was created all the way back in 2014 by Paul Snow and David Johnston.
And our next guest is David Johnston, who's the chairman of the board at Factom, industry legend. He's done a lot of great work from startups. He funds it early days, really was involved in the original decentralized application framework and part of that community. Great to have you on theCUBE. Thanks for spending the time with us.
It's good to be here.
They wanted to see a solution that could fill the gap that existed in enterprise-level data and blockchain-based record-keeping. Basically, Factom wanted to secure millions upon millions of records, be it for health, government research, educational materials, contracts, you name it. If it was a record, Factom wanted to secure it. They would start with Bitcoin, but they would ensure that Factom could also work with other top blockchains that had data that they wanted to secure on them as well. This was big news at the time because back in 2014, there wasn't much discussion about using Bitcoin for anything more than speculation or buying something online at one of the few stores that accepted it. Everyone was curious about how Factom's system would work. And later that year, they found out. On November 17th, the Factom white paper was released, and it explained in detail how Factom's architecture would work outside of the Bitcoin blockchain while still leveraging its trust, accessibility, and security to secure records on it. These guys were on a quest to secure just about every single important document in existence, and that's a fact. It works something like this. Factom had a two-token mint and burn economic system. First, Factoids, the native token, were relied upon to help incentivize network participation. Factoids are an external currency in the sense that they can be traded with other currencies or used as a reward to node holders for validating the network and keeping key services up and running. When it came to services like writing new records to the Factom blockchain, a second internal currency was required called entry credits. To get your hands on some of the internal currency called entry credits, one would first have to burn some of the external currency called factoids. Entry credits were a fixed-rate, non-transferable solution in the form of a token that would allow companies and governments to start publishing records. The fixed-rate aspect of entry credits is important here because it meant that customers would not be faced with the constant volatility that existed in the cryptocurrency industry. This was the essence of Factom's business model, taking any record and ensuring its validity and security via blockchain provenance. Grand ambitions to be certain, and yet Factom had a pretty well laid out plan too. So, now all they'd have to do is convince the crypto community that they were going to be worth the investment because Factom needed to raise some money. The industry had given unanimous approval to Factom, seeing them as a company who could break through the small Bitcoin-focused economy and into the much bigger Silicon Valley-based realm of fintech. Well, now it was time to see if the crypto community felt the same way because on March 31st, 2015, Factom conducted its ICO, or initial coin offering. The offering was 2,000 Factoid for 1 Bitcoin, valuing Factoid at the same exact initial asking price as Ether, who had conducted their ICO just 1 year prior. None of these details mattered though unless the sale was a success and people actually wanted to hold Factoids. The company successfully raised over $500,000 US during the sale that went from March 31st to May 15th. On the last day of the sale, May 15th, Factom dropped some bullish news that got a lot of people excited that had just bought some Factoids. The Honduran government was teaming up with Factom to create a new land registry initiative. Honduras, like many other countries, has growing problems as it pertains to documents in real estate like deeds and surveys. These often come in paper format, so they can be forged, stolen, duplicated, or any other problems that the physical world is susceptible to. Having their land registry documents all living on a blockchain that was powered by Factom seemed like a good idea to the Honduran government. And so, Factom found themselves in the enviable position of releasing great news about their platform just hours after their token sale had concluded. That is good timing to capitalize on what had already been an incredibly successful first few years for Factom. In July, the company went out and conducted another sale, but this time it was for equity and the audience was venture capitalists. This too was a successful sale, seeing $1.1 million in funds being secured. But more importantly, now some big players were taking very keen interest in what Factom was attempting to do. Because if they could pull it off, there would be near limitless business opportunities coming in as more and more traditional companies had both physical and virtual documents they would want to secure via the blockchain. The Factoid token was a hot item when it hit the market, getting up to 21 cents US per token before dropping down to around 7 cents to close out the year in December. However, it went on a real tear to start off 2016, and by the end of January it was trading well above $1 US a token. Factoids would continue to increase in price during the course of 2016, and this increase in price did not go unnoticed. The summer was a good one for Factom, who were able to get token holders excited about their recent developments. The action started on June 17th when the US Department of Homeland Security announced that they were going to be teaming up with Factom to create an Internet of Things, or IoT, security system. This was a major endorsement for Factom Technologies. To really fuel the flames though, they need to get a couple more big players on board, and that's exactly what they did. The next milestone came when it was announced that Factom was joining forces with Inveniam, a financial data provider. The two would work together to put Wall Street on the Factom blockchain to provide immutable and transparent US stock data for the first time in history. This was obviously huge news, as it meant that if everything went according to plan, Factom would be able to claim to have onboarded Wall Street as well as the rest of traditional finance. The potential here was becoming just too much to resist for certain people who really want to be part of this revolution that Factom was kickstarting. That's why a few months later in October, Factom once again found themselves flush with cash. Based on the hype train they had created for themselves, the company was able to secure $4.2 million in a Series A funding round led by legendary investor Tim Draper. And the hits just kept on coming. On November 17th, Factom received a grant from the Bill and Melinda Gates Foundation to look into and create more robust blockchain-based medical solutions. This partnership pretty much sealed the deal for Factom. They had built up an incredible amount of traction for themselves going into 2017. And that turned out to be a pretty good thing because, as fate would have it, 2017 was just one big long acid trip experience from the crypto perspective. Once 2017 kicked off, Factom did what they could to keep the good times rolling during this euphoric moment in crypto. And on May 26th, they announced Harmony, their solution for the mortgage industry. This would allow a seamless transaction between lenders and brokers so they wouldn't have to worry about lost or stolen documents, altered agreements, or incomplete records. There were trillions of US dollars at stake here in the mortgage industry, and Factom wanted to get their hands on some of it. Good news coming out for top projects during a bull market usually meant that the token would see a major pump. Factom certainly enjoyed this effect taking place as the Factoid token went on a major tear. But as they say, all good things come to an end, and eventually this bull market did as well. By early 2018, it was basically over. And then the industry fell into a deep slumber that would last for several years as prices and interest waned. Factom was able to keep themselves as relevant as possible during this time period by securing some noteworthy partnerships. The US Department of Homeland Security decided to work with Factom once again when they awarded them a grant to help them live test a platform meant for securing camera and sensor data. It was another big announcement for Factom, but in a bear market, you could pretty much invent free energy and your coin would still tank on the news. It's worth noting that by this point in cryptocurrency, Factom had begun to fall off the radar for most investors and innovators. In 2014, their idea was quite novel, but since then, the industry had advanced in many ways that really didn't favor Factom. First off, the type of utility that Factom was creating wasn't exactly the most exciting area of blockchain or crypto for investors to pour into. Also, it wasn't part of a connected ecosystem for innovation like Ethereum, nor had it built up enough momentum for itself as a standalone blockchain to really benefit from all the money coming in. Factom was doing a good job when it came to getting big partners coming together, but where it wasn't doing such a good job was growing its token, and by extension, its community. Speaking from experience, when I saw a legion of my friends enter into the crypto industry during the 2017 bubble, not a single one of them had heard of Factom. They knew about meme coins, stable coins, masternode networks, ICOs, and all the top altcoins on the scene. But none of them knew what the hell I was talking about when I mentioned Factom. This is what I mean when I say that time was starting to seemingly pass Factom by. Despite this, in 2019, Factom managed to expand their reach into real estate, healthcare, and supply chain management, all massive sectors. They were also vocal about their commitment to open source development, encouraging their community to help out wherever they could. But as it turned out, that wasn't going to be nearly enough. By 2020, things were getting pretty desperate for Factom. Those big name partnerships hadn't generated enough revenue to float the company, and their token value wasn't doing much for them either at this point. They needed money because they were running out of it fast. On April 2nd, it was announced that Factom's request for further funding had been denied by their investors. With no viable options left on the table for them, Factom was now facing liquidation. On June 19th, the company revealed they were filing for bankruptcy via Chapter 11. Factom had accumulated a lot of debt over the years, upwards of $7.5 million US in fact. Filing for bankruptcy under a Chapter 11 would allow the company to restructure itself while paying back investors over time. It looked like the end for Factom. But this is crypto, so you knew there just had to be some plot twist here. The company would need to sweat it out a bit, but eventually, on August 8th, 2021, they received the most unlikely of lifelines. Inveniam Capital Partners announced they had acquired Factom, and in doing so, they became the 8th largest US holder of patents as it pertains to blockchain technology. It turned out that while Factom hadn't generated a lot of revenue, one thing they had done a spectacular job at was filing useful blockchain patents around their technology. And this more or less catches us up to present day. Factom is still operating under the same name, just as a subsidiary of a much bigger player now. You can try out their services if you want by uploading a record to the Ethereum or Bitcoin blockchain anytime you'd like, for almost no cost. Most cryptonauts do not recognize Factom anymore, with its name being relegated to the dustbin of altcoin history. Regardless of its current placement within the industry, its legacy as one of the early pioneers of blockchain technology is firmly intact. After all, they were one of the first to showcase data integrity solutions using blockchain tech, getting governments and big corporations to come on board. What they accomplished was truly groundbreaking in its day. And there is hope that there's a renaissance in store for Factom, considering they're still helping humanity record important moments and data onto ledgers across the globe. I hope you enjoyed today's stroll down memory lane. Until next time, have fun and enjoy life, my friends. I'll be back soon with another incredible story to tell you.